Welcome back, it's Sid Rajiv from Fundamental Research. Today let's talk about nickel. In my last video I discussed uranium. If you missed that video, make sure you check that out. So nickel prices have been very volatile in the past 12 months, but prices are up 25%. So I thought I'll discuss nickel, look at the key supply demand metrics for the sector, and I also want to talk about two companies that we like in the space. So let's start with nickel's demand. Nickel is a key ingredient for lithium-ion batteries for electric vehicles. It's used as the cathode or the positive side of a battery. Currently, less than 5% of the overall demand for nickel is used in electric vehicles, EVs, but we think that this segment will drive nickel demand going forward. Just to give you some numbers, EV sales were 3 million vehicles last year, and this is expected to increase to 30 million, so 10x by the end of the decade. And in a single EV, about 30 kilograms of nickel will be used. So applying 30 million vehicles to 30 kilograms, we think nickel demand by the end of this decade will be about 750,000 tons. But this is 6 times the existing demand for nickel in batteries. Now, another key factor for the demand side is that within lithium-ion batteries, there are a number of technologies that are existing right now and are in development stage. But after looking at most of the mainstream technologies, we feel that NMC, nickel manganese cobalt, and NCA, nickel cobalt aluminum, these are the two most attractive battery types, especially because these two types have higher density, it's more safer, longevity, and also it has a longer range. And the nice thing with nickel is that nickel is used in both of these battery types, which is why we feel that nickel will be used in the long term in battery technologies. Now, in terms of the supply, only half of existing production can be used for batteries because the other half is not pure enough for manufacturers to use that material. As a result, battery manufacturers and also car manufacturers are actively looking for long-term stable sources of nickel, and we feel that nickel projects in attractive jurisdictions and obviously attractive fundamentals will be sought after. And with that, I want to introduce you to two stories that we think could be likely M&A targets. Number one is FPX Nickel. They have the largest or one of the largest undeveloped nickel deposits in the world, more than 5 billion pounds of nickel in the indicator category. A PEA, a preliminary economic assessment done last year, showed an after-tax NPV at 8% of $1.7 billion US, and FPX's market cap is just $61 million. So they're trading at under 4% of the NPV of the project. So the second company I want to talk about is Tardison Nickel. They have a project in Ontario. The project is much smaller relative to FPX, but why I really like Tardison is that their grades are much higher. Their nickel grades are 0.6%. Most of the nickel projects in the world, the grades are between 0.1 and 0.3%. Any grades over 0.5% is considered to be high. So Tardison's 0.6 we feel will result or will give them robust economics for their project. The company is coming out with the PEA shortly, so that I think will be the next catalyst for Tardison. So those are the two ideas I wanted to share with you today. Hope that helps. If you have not seen copies of our reports on these companies, please make sure you be a member of our platform, research@farsi.com. As always, if you like our videos, give us a like, share, subscribe. Thanks for watching.